Hello and welcome to the Ledger Lounge, an accounting and business advisory podcast brought to you by James Scott from Oldham, Greater Manchester. My name's Matthew Taylor.
I'm Katie Allen.
And I'm Lauren Thompson.
Welcome to the Ledger Lounge. Welcome to this week's Ledger Lounge. This week we're going to be diving into a topic every UK business has to wrestle with at some point, VAT.
That's value added tax if you're new around here.
So this week we're one short due to should we call it a scheduling error?
Sorry.
On my part.
Yeah.
Or your
I'm bad
part.
cop.
You were bad cop. I was too scared to be good cop again. So it's just Katie and I today.
So if it flops, we're sorry.
We'll let it happen again.
Yes, so VAT, Matthew, basics.
Yep. So VAT is a tax you charge on most goods or services that you sell, but you're only required to register once your taxable turnover hits a certain threshold, which in this year is £90,000.
Yeah.
But in a rolling 12-month period, the government review this regularly.
So, yeah, because you could have a company that's seasonal that know that they're going to go over it in December, but know for the rest of the year, up until the following November, they're not going to make many sales, but it doesn't matter. You go over it in December, unfortunately.
Yep.
It goes off your rolling 12 months.
This rolling 12 months. Yeah. So you still need to register if you hit that threshold.
Yeah, and I think some people assume that, I only need to go VAT registered if I'm a company. If I'm limited. Like sole traders don't always understand.
Hopefully that's what we're here to do.
And my partner is one of them, doesn't understand.
So if he goes over 90,000,
then yeah, I'm going to have to do VAT returns for him because he won't do them himself.
Unless you get a really good accountant to do it for you.
My child can do it. I'm joking.
So you've got 30 days from the end of the month that you cross the line to register.
Yeah, which I mentioned, we were discussing this before. You've got 30 days as an individual or business, or usually your accountant will do it for you, to register. And we've just recently noticed when we're doing it, HMRC give themselves 40 days to respond. And I think, seems a bit unfair.
Yeah, but I think they say that the 30 days is the date you go over the threshold.
Yeah.
They can then do their checks. Because they do checks.
And we've had quite a few clients, maybe not so much recently, but definitely in the past where we've had to register them. And then the first VAT return, they get a letter to provide. Can you provide this information? Can you send, 5 invoices to us so they can do a check? It's not necessarily an investigation. I think it's just a flag on their system where they think, right, we're going to check this.
Yeah.
Make sure they're doing it correctly.
Yeah, I think they call it a desktop check.
Yeah.
So they'll just ask you.
But
they're just making sure that on your first VAT return, you're doing it correctly.
Yeah. Which you can imagine if you've not got an accountant or you're doing it on your own and you get that letter, you probably think, what have I done? What have I not done?
That's true. Yeah. But the important thing is that you make that registration in that 30 days, because if you miss it, you get a penalty.
Yeah. You don't have to register though. It just because you've gone over the turnover. Sometimes it's beneficial for people to register knowing that they're not going to go over.
I wonder where you were going with that then. You don't have to register. But yes, you're right.
Like
you can voluntarily register.
You can only turn over 50k a year and still register. They're not going to say, sorry, no, you're not.
Yeah.
You're not earning enough.
No. So even if you turn over £10,000,
you can still
and it's
register,
beneficial to your business to register, you can still do it. Just to elaborate on that, if you do work solely for VAT registered businesses, then they aren't going to mind whether you're VAT registered or not, because they can reclaim the VAT that you charge them. If you're doing work for domestic customers or businesses that aren't VAT registered, then that's when you probably wouldn't look to register voluntarily, because your prices would go up. They can't
claim it back from anywhere.
Yeah, and your prices are 20% dearer than they need to be.
Yeah, which then probably brings them to go to Joe Bloggs down the road who's not VAT registered.
Yes.
They're usually cheaper.
Yeah, that's it. It's 20% cheaper, and that's what we're finding a lot. I mean, there's a huge debate about what the VAT threshold should be. Should it be doubled?
It's gone up, by £5,000 and how many? Well, I don't know how long it's been.
It was last year.
No, I mean like when the 85,000
the 85, that was pre-COVID, wasn't it? So 5 or 6 years.
Longer than,
I think the problem with a VAT threshold at 90,000 is that it inhibits growth.
Yeah.
So you've got a builder who's turning over £85,000, but he's doing domestic work. If he tips over into £91,000, he's going to have to charge VAT on all his sales. We actually had a case of a client recently who 18 months ago registered for VAT, and he's a builder, so contractor, doing domestic work. His business suffered so much because he couldn't get the work that he's now deregistering for VAT.
Right.
That's why I say it's inhibiting growth. Because he's got a business, got potential, but he's restricted in that potential because of the VAT threshold.
Yeah, and if he's got competition like different other builders that put tenders in or quotes in, and he's a bit higher than usually most people, especially now, are going to go for the person who's priced lower.
That's right, yeah.
So most of the time.
Similar
it
with
does seem a bit unfair sometimes.
Plumbers, so you fit a boiler, and the majority of the cost of a boiler isn't going to be the labour, it's going to be the physical boiler. So if the plumber supplies you with a boiler, that's going to boost his turnover.
Yeah.
And he'll hit that 90,000 sooner.
Yeah, I think in an ideal world, it shouldn't be based off turnover. It should be cost of goods could be looked into as well, because like you said, a plumber, the materials are really, really expensive. So if you turn over £92,000 a year, you haven't made 92.
No.
You've bought all your materials, and they've probably told 60.
Yeah, 60,000 of those could have been materials.
But then it probably gets difficult then basing it off the difference between your sales and your
So
costs.
arguably, should the VAT threshold be a lot lower, then everybody's in the club.
Yeah. For different sectors, do you mean, like different companies? And
no, I think maybe if across the board, you could say that everybody should be VAT registered.
Yeah.
It's an argument that goes on and on. There's probably no right and wrong answer, but I think it would level the playing field for somebody who's turning over 85,000, who's got a business that could turn over more.
Yeah.
But he's being inhibited by...
Yeah, if it's like a rule of thumb that once you've set up your business, you're VAT registered.
Yeah.
From day one.
Yeah. It's interesting that we were talking about MTD the other week.
Yeah.
And the threshold for that is 50,000, dropping from 30,000 to 20,000.
Yeah,
and you wonder whether...
The club.
Yeah. Everybody's in
all
the
these
club.
Clubs.
Yeah. You wonder whether that's an eventual aim of government to align to, because we've got MTD for VAT, we've got MTD for income tax, maybe aligning the two levels at 20,000.
Yeah.
Is the eventual aim.
God knows what their plan is. We don't know.
No. So you've got two separate businesses, independent businesses. One's turning over 89,000. One's turning over 91,000. The one that's turning over 91,000 has jumped over the line, is in the club, has to charge VAT on all his sales. The guy who's still turning over 89,000 has a choice about being in the club and can be turning over and just turn over 89,000. So there are different classifications of sales. On most goods and services, there'll be VAT, but there are exemptions. With all VAT rules, you get, this is the rule, and then there are exemptions. For example,
if you actually put in on HMRC what is exempt from VAT and what is not, like the list, it can be a minefield for somebody, can't it? Because the list can go on and on and on, and different sectors have different. Like agriculture's got different rules.
Yeah, I think the government realised that things like essentials, food, is one. There's zero rated VAT, so VAT is charged at 0% because it seems unfair to increase the price of food to a consumer unnecessarily. So food is zero rated, children's clothes are zero rated, and domestic gas and electric, or at a lower level for commercial, is charged at 5%, so a reduced rate. So there are a number of different ways that you can tackle VAT charging and not having to charge it on everything. But it is really quite specific on... There was a big case about whether a Jaffa cake is a cake or a biscuit.
A huge court case against that. I remember learning about it when I first started college.
Yeah.
Where they bake Jaffa cake. Is it McVitie's who make it? I'd basically made a ginormous Jaffa cake and took it to court with them and presented it and said, biscuits are soft when they go off. Cakes go hard. Because basically, is it biscuits you pay VAT on and cakes you don't? For whatever reason, I don't know, it's still food. I think it's more to do with the process of how it's made. And they presented it, and basically that's how they got away with not charging VAT on Jaffa cakes.
Yep.
There's been many more. Like, if you could, it's quite exciting sometimes if you Google like VAT cases, like who's won a VAT case or whatever. But yeah, I mean, can you imagine a massive Jaffa cake?
I think we should get worried though if we think that VAT cases are exciting.
No,
maybe they need to get out more.
Well, yeah. No, it can be exciting when they've had to prove why they should be exempt from that or not.
So I think we move on to VAT schemes.
Yes, lots of different schemes. No, not lots of different ones, but the general scheme is you go over the threshold, you register for VAT, you charge 20% on your goods, services, products. You can go on a flat rate scheme where, again, there's different rates. So you still charge VAT to your customers at 20%, don't you? So they still get an invoice for £100 plus VAT, 120 quid. It's almost like an accountancy journal then, isn't it? Where if you're then only going to pay 14.5% seems to be one that we come across a lot.
Yes.
They only pay 14.5% on the £100, don't they? Not £20.
Yes.
£14.50.
With the 5.5% difference between the normal 20% VAT rate and the 14.5%, taking account of the tax, the VAT that you could recover on your purchases.
Yes. So if a lot, like we've got quite a few clients now where quite a lot of their purchases are from like US companies like software or, I don't know, let's say we have an advertising agency who only use US company, Microsoft, Google, Facebook. You can't reclaim VAT. Well, that's reverse charge, isn't it? But
a lot of those
they might benefit from
EU,
going on the flat rate scheme because they can't recover much VAT back on their purchases.
So the answer on the flat rate scheme is if you've got a business that's turning over less than £150,000 a year, it's always worth having that conversation with your accountant and do the sums.
Yeah, because it's just a bit of
it's an
task, isn't it? To like, let's just see, is it more beneficial or is it not?
Yeah, so one, it's an administration saving that you don't have to record all of the VAT.
Yeah.
And two, it might save you some money. It could be a good earner, but it's all very industry specific. Yeah,
but then the HMRC won't. I think I've had it a couple of years ago where I've rang them to say what percentage should your blogs be on the flat rate scheme, and they can't actually advise you.
No.
So it's always one of them. I think, well, I think it could be this one, but I'm not too sure.
Yeah. I think as long as you made your best guess at the rate. If you're a consultant, though, then there's a rate, because you're expected to have a very low input tax recovery. If you've got costs of less than, I think it's £1,000 a year, then the flat rate scheme may not be for you. But the answer is, again, speak to your accountant. So then we've got the cash accounting scheme, which is a really popular one if you sell goods or services on credit. So you only pay the VAT over when your invoices are paid.
It's great for cash flow though, isn't it? Because some businesses that aren't on the cash accounting scheme might raise an invoice on the first of the month. They might be on 90 days credit or give the customer 90 days, but they've paid the VAT before they've even been paid for the invoice. I suppose that works for some businesses, bigger businesses probably, but
there's a maximum turnover threshold for the cash accounting scheme.
It's quite high.
It's quite high. Yeah. It's
1.35, is it?
Yeah. I think as a general rule of thumb for cash accounting, if you're making all standard rated sales and all standard rated purchases, if your debtors, so the money you're owed, is more than your creditors, the money you owe out, then you're probably going to benefit from being on the cash accounting scheme.
And then you then see a trend with some clients where on the last week of that VAT quarter, they've made a load of payments out to claim the VAT back, which they can do it, they're allowed. That's
tax planning.
Yeah,
That's minimising it. Yes.
There's just hundreds of transactions in the last week of the quarter.
And then there's the annual accounting scheme.
Not many people choose that. Well, I've never come across it very often.
No, I think you maybe dealt with one client that was on it, but it is a bit of a rare one. Certainly in our practice, maybe it's something that we've not promoted or discussed with clients.
I think it's a really hard one because if you've got thinking of like a business that, I don't know, like a construction company that gains a contract and they know for the next 5 years that they've got this said contract, that could work for them for cash flow purposes. But if you've got somebody that doesn't actually know what's going to happen in the next 12 months, They could be paying VAT based on a really good year, the previous year's worth of sales, but not turning over enough.
Yeah.
So you have to manage it a bit.
Yeah, I think
in that sense as well. Like if you know that your sales aren't going to be great the following year, or your expenses change or whatever, you have to monitor it a little, because they do allow you to reduce those monthly payments if you've got valid reasons.
If you can justify it.
Yeah.
I think from a certainty point of view, if you've got an established business that has got a fairly consistent level of income, then it's certainly one to consider, because it's, again, another administration saving where you only file one VAT return a year and then balance up after the end of it.
I have not pushed that on clients.
That's because you like dealing with clients on a regular basis. You paid instalments throughout the year. Kind
of pay in advance, don't you? So you're paying every month.
An estimate.
Let's say at the end of the year, you do your annual return, pay the surplus. If there's more to pay, you pay. Usually what happens, or what we've seen happen, is when you get a deficit, you can request to have it refunded, or you can request to put your next year's payments, you can reduce them by that, and kind of like evens itself out.
I think the important thing to remember with all these, they're all turnover based. They're all sector based. So keep an eye on your turnover. It will reduce your admin, but just make sure you're on top of all the changes.
Yeah, VAT can be a minefield, really, can't it? We could probably do like 12 episodes just on VAT alone, because of there's so much to it, isn't there?
Yeah.
It's not just about VAT on sales and VAT that you can reclaim. There's all sorts, isn't there? Yeah,
I think we're scratching the surface today with this. But if you're insured,
we wouldn't want to bore you with 12 episodes of VAT.
If you're unsure, just give us a call.
Yeah.
Speak to your accountant.
Returns. VAT returns. I quite like doing them.
Yeah.
Yeah. If I know that I've done the work, if I know I've done the bookkeeping, I like doing them. Don't know. I think it's for us, or for me as an accountant, when I'm doing the VAT return, knowing that you've done the VAT return makes it easier when you're coming to do the annual accounts at the year end, because you know everything's been included. You're kind of checking it all the time, aren't you? We've got a system that we use as like a triple check so human would check it, I check it. Oh, look, that's wrong, or whatever. Then I'd usually go to Matthew if I'm a bit like, can you just cast your eye over this? And then we use Sift, don't we?
Yes.
It like pulls everything through, and it tells you where. It doesn't tell you there's mistakes as such. It might say this account's not been used before, and it prompts you to go and have a look, and you think, no, that's right. So that Sift is quite good for that.
Very, very good for quality control.
Yes.
It will highlight if the different VAT rate has been charged on a similar supplier. VAT returns, we filed them. Most of them are filed on quarterly basis, and you've then got the 7th of the month after the following month.
Yeah, you've got like a month and 7 days.
Yeah, so 30, 37, 38 days to file your return. So that'll be 4 returns a year. You can do a monthly return.
Yeah.
Some people who get regular repayments do a monthly return. So they can get the money a little bit sooner. So if you've got, I don't know, for example, you're a business that's doing a lot of exports.
Yeah.
So you're not charging VAT on those exports, but you've got purchases and costs in the UK, and you've got VAT to recover, then you're going to get a rebate every VAT return. So it can be done monthly, and that'll help your cash flow. And of course, there's always, as we mention every time, making tax digital.
Yeah. Which I think at first, before it was coming to play for VAT, it was a bit of we thought it was going to be a headache. Everyone that comes to us that's new that needs to be VAT registered doesn't know any different.
No, that's true.
I don't think I've ever filled out a paper VAT return anyway, but I imagine at some point you had like a 50-page tick, put the amounts in. I wouldn't have been an accountant if I had to do that.
I don't think many
My
people
handwriting's terrible.
The main thing with MTD is it's all filed electronically. It's digital.
No more spreadsheets, no more losing your paperwork.
No more guesses.
No more not saving the PDF.
Yeah.
And then obviously, not that we would like anybody to get an investigation. It just means that everything's there and you're not having to sift through boxes of paper VAT returns or spreadsheets, PDFs. Unless you like letters from the HMRC, then go wild.
So you're dealing with the client's VAT returns more than I am. And
yes.
So what tips would you have for a client who's VAT registered?
Respond to my emails when I ask you for your information. No, just don't wait until after your quarter to put all your information into Dex, because it's more beneficial for a client to just upload as and when. If you've been to Screwfix, you've got your receipt, a paper receipt, take a picture, send it. It's in. It's done. I think there's nothing worse than them knowing that they've got a box of receipts that they've got to either take pictures of, or they've got an inbox in their emails of invoices that they've got to click forward on each one at the end of every quarter, because everyone knows the VAT return's gonna be due, the ones that are registered and have been for a while. I do feel like some people leave it to the last minute and wait for this email off me, and then they can become a bit overwhelmed with, oh, I'm too busy.
Yeah,
I ain't got time to do this, and I'm just sending. Yeah, so I think that's because the turnaround's, 5 weeks?
Yep.
As accountants, if you've got 15 VAT returns to do in that 5-week period, obviously we're doing it weekly, monthly now, so you've never got 3 months worth of work to do, but it can be quite difficult if 5 of those clients don't bring or send their information, that you've got 5 returns to do from scratch pretty much. And then I think obviously humans can make errors then when you're trying to get all this information into the system all at once.
So get reminders in your diary.
Reminders.
Get your stuff
just
to Katie.
Just touch base with your clients. Not nasty, like I don't say, can you send me this?
So they don't face the wrath of Katie.
I've noticed that you've not put anything in Dex for 2 weeks. Is there a reason? They usually say, I've been busy, I'll do it now. And I'm like, thank you.
Yeah. Yeah. Another good one is direct debit. So if you pay by direct debit your VAT by direct debit, you get an extra
5 days.
5 days?
Yeah, it depends. They say on or after the 10th, but it usually ends up being, I think they apply for it, don't they, on the 10th?
On the 10th.
It comes out of your bank on the 12th.
12th. So keep your money in your own bank account a bit sooner.
Yeah.
And the other one is don't miss any deadlines, because there are penalties for late submission and late payment. It's now a points-based system, so a bit like your driving licence.
But not as fun. Well, unless you like speeding.
So get 4 points and you're fined. It resets after 12 months if you behave, so stay on top of it.
And I think speak to your accountant as well if you're struggling and you're unsure what to do. You've left a pile of paper to one side because you don't know what to do with it. Give us a ring and ask us. We can advise. And I've probably spent, the past 10 years doing VAT returns on all different systems. So, give us a ring.
Yes. So, I suppose to recap, make sure you're on top of your turnover figures. Register if you need to.
Pick the right scheme.
And file on time, or face the wrath of the tax gods.
Pick your right scheme sounds a bit like, lucky dip, which one should I do? But we mean, really think about it and what's going to be more beneficial for your business. You might have a friend at the pub that says to you, I'm on this scheme, it's really good for me. And you think, my friend at the pub said that I should be on this. Well, everyone's business is a bit different, so don't always listen to the people at the pub.
We've not really touched on a lot of the wider impact of VAT today. E-commerce for one, and the hurdles that can throw at you.
Yeah, and we have done an episode about e-commerce. We might not have touched on VAT as much, but it's different VAT in e-commerce businesses. So maybe that's another episode.
Yeah, so check out the library on the e-commerce that we did, the podcast library. So if you're new to VAT or just looking to make it work better for your business, we hope today's been useful.
Yeah.
And give you a bit more.
Don't be put off. I've had clients in the past where I email them and they say, I ain't got the paperwork for that, but there was definitely VAT on it. Quite a bit of a chunk on VAT, but there's definitely more to it.
Definitely more to it. So thanks for listening, and see you next time.
The Ledger Lounge is brought to you by James Scott Accounting and is hosted by Matthew Taylor, Katie Allen and Lauren Thompson. For more information, visit jamesscott.com. This podcast is recorded at and produced by KUPOD Productions, audio by Matt Dean and video by Eddie Corteen. For more info, visit kupod.co.uk.